Hi, this is Phil Town.
This is Danielle Town.
We're here to talk to you about InvestED.
Mindful money.
Rule 1.
Conscious investing.
Numbers.
Numbers for people who hate numbers.
We're deep into the numbers.
I have to say, I looked back at my notes and I thought that we had talked about 5 numbers, but we talked about 4 numbers. So you were correct.
We're doing the 4 growth rates.
Yes.
Which are 4 of 6 or 7 numbers that I really focus on. And you're going to get different numbers of numbers that people focus on. The main thing to understand about the numbers is that you have a huge pile of them when you look at financial statements, and you don't have to begin by understanding all of them. You can just, like we were using a metaphor last time about, going into a foreign language, and you just need a couple of phrases you can move around the country pretty well. And that's the phrases we're going to give you right now. And it turns out that the best investors in the world are going to focus on, some view of this. And that is
some view of what?
Of the major numbers, the most important ones being related to figuring out what the cash is going to be like coming in on this company in the future. That's really what this is all about.
Okay.
Because if we're going to figure out ultimately for 2 things, is this a wonderful business? And Charlie's explained to us what that's all about. And second, is it on sale? And Charlie said we can't pay an infinite amount of money for it, so it's got to, we need a margin of safety of some sort. Mm-hmm. So what a business is in terms of wonderful is spotted substantially in these numbers. And whether it's on sale is spotted substantially in these numbers as well. So these are really key numbers to focus on. And so you're going to have to remember, okay, these 4 growth numbers are what I need to see. And the reason there's 4 of them is because there are heinous bastards out there who are running these businesses, some of them, who have accounting teams whose job it is to fool you by manipulating 1 or more of these numbers.
Are you saying they could not manipulate 4 numbers?
I am implying that the only way to manipulate all 4 of them is to lie. And that is jail time. Mm-hmm. So what these guys do is try to color inside the lines, barely, and use clever accounting, legal accounting, to obfuscate and fog up the mirror that make it more difficult to know what the company's doing. So one of the things you learn as we go along is that if you can't figure it out pretty easily, then move on. You don't have to figure out they're lying to you and trying to fog the mirror. All you have to know is, I don't understand what these guys are doing.
Yeah, that's interesting because our next topic that we're moving on to in our 4 topics when we analyze a company is management. That's the last one, right?
Yep.
So if we're worried about management obfuscating and lying to us with the numbers, maybe we should look at management ahead of the numbers?
Well, I mean, I'm very tempted to say, there's this path you have to walk. I really like the idea of you just go downstream. Well, I was over at Rancho La Puerta, which is this, I'll plug them. They are spectacular. I'm only plugging them 70 years late. Everybody knows they're spectacular, except me. But I just went.
It's a spa, right?
It's a spa just on the other side of the border in Mexico.
He needed a break from his stressful life, everybody. Don't we all have so much sympathy?
Well, I have a whole bunch of friends I try to get together with twice a year, and somebody decided Rancho La Puerta was going to be it this year, and they didn't sell it.
They didn't sell it? What
no. I mean, usually they're like, you got to go to this place we're going to in Croatia, which is so unbelievable. You can't miss it. But this one, they totally yeah, it's nice. It's easy to get to. It's a spa, I had no idea how kind of revolutionary Rancho La Puerta is. It's extraordinary. 70 years ago, it was full-on revolutionary. They were absolute health nuts who thought, you had to have food that didn't get sprayed with fertilizer and pesticide and whatever. And they wanted just really good, natural, organic food. And that was insane. 70 years ago.
Yeah,
That was
nobody was doing that
crazy.
70 years ago.
That was crazy land.
Which is amazing to somebody my age, in my, low 30s. Thank you. I was like, wait a second, am I going to tell my age? So I'm 33, and there's like, to me, it's completely normal to have Whole Foods, speaking of Whole Foods, on, most corners in most cities. And it's so a part of our nomenclature and our conversation of like, where did you buy your food and where did it come from? And is it local or is it not local? And what's your ethical stance on where that food came from? It's just something we all talk about. 70 years ago, nobody talked about that stuff.
And for all the rest of you who don't talk about that stuff at all,
do other people not talk about that?
Danielle lives in
Boulder,
yeah. And right now we're recording this in San Diego, and I was at Rancho La Puerta. And you can start to think that, my God, the whole world is so interested in health and food. And then you get to Georgia and find out you have to drive an hour and a half to get from our house to Whole Foods.
Well, I think we talked about that in our first episode about Whole Foods,
and
that you had a really bad experience, actually.
Yeah, they had the same inventory as Publix.
Yeah, which is crazy.
I was like, are you kidding me? I mean, in terms of their fresh stuff.
Yeah.
All the packaged goods were, of course, all super organic stuff and all that. And their meat department was better. Although, gosh, man, I paid like $23 or $4 a pound for some natural, walked around on a halter and loved on beef someplace. And
well, that sounds good.
It wasn't the Wazoo beef either. It wasn't that Kobe stuff where they love on them and massage the cow.
Yeah.
And then they feed them like beer mash and they just are fat little happy pig cows, I guess. No, these cows are just natural grass-fed, wandering the range cattle.
Okay.
$23 a pound for a steak. Like horrible. Like, it was like
what?
a $4 a pound round roast type steak. It was terrible. It was like really.
Did you cook it poorly?
I must have or something, but it just didn't cut it. I was like, holy smokes. I was looking for something better, So I'm back to, shooting small animals. Put it in my own freezer.
That sounds gross.
Yeah, it was fucking.
So you went to the spa. What was your point with the spa?
Well, my point with the spa was just to, plug them because I think they're fantastic, okay. and their management team is dedicated. When we get around to management, I may come back to Deborah Shizeki, or however you say her last name, who inspired her staff and continues to do so. She gave us a little talk. She's 93. She was awesome, and I'm not just being nice. I'm saying she was actually incredibly awesome, and is probably going to change the world some more, before she checks out. So, the thing that astonished me was that they have employees whose families have been working there at Rancho La Puerta for 75 years.
Whoa!
I mean, who does that?
Like, so from the beginning.
From the beginning,
multiple families.
Somebody's grandfather worked 40 years there, and then his kids worked 30, 40 years, and now their kid is there.
That's just
third
incredible.
Generation. Yeah, and it's about the quality of the people. It's about the quality of the work. It's about management taking care of its people. It's about we're going to talk about.
It's
all
about
that.
Feeling that you're doing something important.
It is about that. And it's about being able to have your dreams come true in the context, through your job or in the context of your job. I mean, I'm serious.
Something I hope we talk about more as we, every now and then we talk about like sort of voting with your dollars, with your investments. And I think how a company is run is incredibly important.
So do I.
Almost more so, and I'm not even sure I agree with myself on that, but maybe more so than the product they make or the service they provide actually in the world is how they treat their people.
I agree. I agree from a point of view of an investor who wants to be inspired by people and to have a connection emotionally with what I'm doing. Yeah. Because if it's just about making the money, right? I mean, that's where Wall Street gets such a bad rap, is they're just such sort of, they don't mean to be evil, but they do evil things, right? I mean, they just invest in things that are bad for the world. And they don't think about it. It's just, how do I make more money on this? And okay, fair enough. But I think people like John Mackey and Deborah are bringing an ethic to the world, or bringing it back, that says, like the Google guys, you can't be evil. I love that.
It's don't be evil.
Don't be evil
at Google.
No, you can't be, because sometimes they do.
They definitely can be. I think the jury's out on that one right now.
Well, it's so interesting because you get into moral conundrums. You get to be in a rock and a hard place. I mean, look at Google in China, right? Where they were criticized terribly for cooperating with the Chinese government about, regulation kind of, and not allowing certain things on the internet. And then they decided, no, we're violating our basic ethic here. And they pulled out of China, and they've given it over to another company, which is now huge and just went public. It's kind of like, whoa, gee, I guess all these investors didn't give a damn about what they put their money into. We thought we were being good and would be received well by American investors. And instead, a bunch of investors just went to put their money in this other thing. So part of what we're doing here on this blog, I hope...
Podcast.
is to and I think inspire people to think seriously about voting their values.
Yeah.
I mean, I really want to see all of us do that.
Well, and for me, constantly trying to find a sort of a way into this stuff that makes it interesting and that keeps me attached to it.
I think you got something there.
Yeah, right? Like if it's just something I have to do and I have to look at these numbers that we've been talking about and I have to read the news and stuff, fine, whatever. I can do it for a little while, but I'll probably stop doing it after a year or something. Right? I can make myself do something for a while.
Yeah.
And after a while, you can't make yourself keep doing that thing if it's really that painful.
Yeah.
But if there's a broader goal, if there's something that you're really gaining outside of that particular small pain, then it becomes worth it and it becomes larger. I mean, it's like working out, right? I keep thinking about this like working out. Yes, right now, I don't feel like working out at all. But I know that if I do it today and tomorrow and the next day, in 3 months, I can run a faster mile, or I can, do a different pose in yoga or something. There's a larger goal, and that's going to make me feel better. Yep. And I think it's the same kind of thing here. So it's a practice.
Yeah, I mean, think of what they do at Rancho La Puerta. Everything is natural. Everything is organic. Everything is grown there, and cooked with a great amount of care. And the food is simply off the chart, phenomenal. I just don't think I've ever eaten better food in my life, and it makes you feel good. The portions are the right. Everything is so spectacular, and this is all driven by this intense value set that they've got to live healthy lives. And John Mackey puts it like this for Whole Foods: whole food, whole people, whole earth. So they see that as their mission statement, right? And the whole company operates on that basis. And look at the fanatical employees they've got at Whole Foods markets. I mean, my gosh, these guys know everything about their area, and can tell you all about it. And you go to Publix and, they're there for a job. They're not inspired. And we want to be inspired as employees, as
we
founders.
Want to be inspired as people.
As people.
Right?
And as investors.
Why else? I mean, you get out of bed because you have to, right? But hopefully you get out of bed because there's something cool to do that day.
Yeah, you put your feet on the floor and you think, wow, man, maybe I'm going to find a really great company to support today that's on sale, that needs somebody to step in and start buying that stock, or it'll go to zero. So you have a role.
And if I do that, then maybe I make a little money and I get to create a micro. So there's the macro happiness inspiration, and then there's the micro happiness inspiration of what do I actually want in my own personal life? What can I do for my family if I can retire 3 years earlier? Or
we should podcast about that. I think
that
should be a whole thing.
That's what we're doing. Dad, we have a podcast. We're recording it right now.
And in fact, the title has a kind of quality to it. Well, there's a number of meanings of that title, right? When you think about invested, that's putting money in this stuff, and then there's invested, which is you're committed to something,
being personally invested.
And then we very cleverly put a capital ED at the end, which is short for education.
Whoa!
So, and we waited until I
have to give credit to my wonderful friend Sarah Bartholow, who has her own podcast about food. You guys should look it up.
What's it called? Sarah
I was
Barthelow's-
hoping you would not ask me that because I don't remember.
All right, we'll find that out. And we'll be in the show notes.
Yeah. It has a cool name. They look at some food saying every week and then talk about foods that come out of that saying and how that saying came about. And she's got all these famous people on it. It's pretty cool.
Fantastic.
Maybe I will look it up right now.
Okay, go
while we
for
talk
that.
Because I'm so sorry, Sarah.
Because I'm going to plug future podcasts because we are going to have famous people.
I know we are.
I know. In fact,
we're going to have non-famous people too, which is cool.
Well, starting with us, for example. But I think we're gonna both fly out here and go up to Ojai. There's the valley up by
we are?
where your uncle lives.
This is news to me.
Yeah, and we're going to go visit with some people up there who are friends of mine who have done magic things in the world and continue to do it. And we're going to get their view of investing as well. So that'll be fun. But for right now, let's just put a kind of an underline on this bit right here that we really want to spend some time talking about values.
Okay, but Sarah Barthelow's podcast is called And Eat It Too. And you can find it on iTunes.
I like that, And Eat It Too.
It's really cute. Yeah, and she's awesome. So, and she writes an amazing blog called Little House Pantry, and you guys should all look it up. So she's the one who designed our logo thingy that goes on iTunes.
Huge.
And did the ed at the end.
I'm going to send her a link to our podcast as a thank you. We're going to give her a free podcast.
I'm sure she'll really appreciate it.
And when we get a chance, I really do want to thank her. I think it's just a cool name. I like podcasting under the banner of InvestED. I think it's way cool. Yeah. Because I see it as InvestED is a sense of values. It both is the value to do investing and to be committed and to fully go into the pool and really be present with it, like you talked about once as a practice. Mm-hmm. That's part of it. And then to think about it in terms of values, invested in the future of our country, the future of our communities, the future of our world, the future of our children. All of those things are so massively impacted by where we put our money. And we do think about it when we go and buy things often, but we don't think about it when it comes to putting our money into the world of investing. We just think, I'm just going to give it to a mutual fund manager and he'll put it in things and diversify me. And you don't realize that you've got your money in things that are horrible, and you're investing with, you're helping heinous bastards run their business, And I mean, not that people are bad, but just they don't care, or they don't think, or they're driven by goals of I want $20 million a year, and I don't care if I have to fire a bunch of employees. So it's just you've got to bring your values to the game. We're going to talk about that a lot, actually, as we grow, maybe more and more as we go. But for right now, we got to come back to the numbers, or we're never going to get past.
We're never going to get through these numbers.
Can you sense that we're avoiding the numbers?
If we're avoiding the numbers, Dad, everyone's avoiding the numbers.
Everybody's avoiding the numbers except those rare and lovely people who just love the numbers and who, like the guys on the Matrix in the ship, were looking at the screen and all they see is, you and I see dropping lines of numbers and letters.
Okay.
But they see the girl in the red dress.
I have not seen that movie since it came out.
Oh, well, there you can look at the numbers and start to see what they mean without seeing the number anymore. You just see what they mean. That's way down the road.
Would you say it's a language?
Awesome. So I think we got to go back to it a little bit. We're still stalling.
So nerdy right now. All right.
Where are we at? We are on EPS.
The third number. No, we did EPS.
Okay,
EPS is earnings per share.
And EPS is bottom line. But we didn't explain why I said it's fictional. Remember I said it's fictional profit?
I do not remember that. So,
I wasn't sure you picked up on that.
I didn't.
Yeah, I said it's a fictional because public companies have a special kind of accounting called accrual accounting, and they go by a set of accounting principles that are called generally accepted accounting principles, GAAP, and those two things are important to know that's what you're reading, and they present a view of the world which is true from that view. It's a little bit like you put on green colored glasses and you see green things, and then you can take off the green glasses, put on red glasses, and you see red things. So accrual accounting is looking through the numbers in a way that paints a picture of the health of the company or the disease of the company that we understand when we learn how to read this stuff, okay?
Okay.
But you need to know that accrual accounting is not reality.
It's sort of a mathematical fiction in order to present a picture at a given time.
Right. The picture is a good picture, or we wouldn't use accrual accounting. But it's not the same picture as the balance sheet, which is reality. It tries to be, it should be, right? These are what the assets are worth today. These are what we owe everybody, and the bottom line is what we come out with, the equity of the company. But EPS is very interesting. Earnings per share sounds like net profit. Net profit, earnings per share, those kind of things. I shouldn't say sounds like net profit. It sounds like that's what should be in the bank.
It does.
But it isn't.
Got it.
It isn't in the bank. It's a fiction of how your business stands over this kind of time period of 1 quarter or 1 year or whatever. And it's kind of the flow of sales and costs of those sales. It's the flow of that money, but it's not really the flow of the cash. So for example, if I run my business on accrual accounting, what the rules say is that if I sell you something, I sell you my widget, you owe me the money, but you don't have to have paid me for me to actually book it as a sale. So it looks like I made that money. I made that $100. I haven't gotten paid the 100 for lots of reasons. Maybe the credit card bill hasn't come through to me yet through the merchant accounts. Maybe I'm going to let you pay me over time and I will lend you money or some variation like that, right? So in accrual accounting, there's this idea of accounts receivable, which is money that's owed in, right? Which is actually on your balance sheet. That's also not in your income statement. Accounts receivable is an asset. What's on the income statement? It doesn't say anything about you didn't get paid. It just says you had the sales. Just says it. And then you take out all the money you had as an expense. Notice I didn't say paid. You have to book it as an expense. So there might be people you have to pay yet, and we're going to put it on here as if you did, but you didn't. You owe it, and those are called accounts payable, and those are also hanging out over on the balance sheet as a liability. You owe the money, but that's not in there. It doesn't say you didn't pay it. It says it looks like you paid it. So accrual accounting has its value. It has its value, and you end up with this notion of earnings per share or net profit. But the reason I said it's fictional is because your earnings per share or net profit aren't what's in your bank account. And companies actually get into financial difficulty who are profitable because they can't get their hands on the cash. The cash didn't come through fast enough to match the bills, which are going through faster. And as a result, they're doing really well. In one sense, the income and profit and loss statement look really good, but they ran out of money. They ran out of cash. So for that reason, there is a third thing.
Okay, I was about to say, what do we do about that?
Well, wait, I want to dial it back.
Okay.
Because while we're on the income statement, we should talk about sales, which is the third thing. Sales per share is our third growth rate we want to watch.
So I had operating cash per share.
We're going to come to that last.
That's going to be last.
Yeah,
okay.
it's going to be last. We'll just stay on the income statement for a second. Remember we talked about top line and bottom line. Bottom line is net profit or earnings per share. Top line is sales or revenue, whichever one they put on there. And that means what you sold. What you sold, you may not have collected for it yet, but you sold it. And everybody's excited about having, a company that's selling stuff. And so the top line is important because you want to see that there's ways to manipulate the bottom line and look like you're growing your company because your earnings are growing. But all you're doing is firing everybody and you're really kind of just squeezing. And the earnings are growing, but the sales aren't going anywhere. Like right now, IBM, as we speak, has their revenue stream basically flat. it's not growing at all. In fact, it's been going down quarter after quarter after quarter for a couple of years. And yet its earnings are going up every year. So you look at this and you go, wait a second, how is it? It would red flag, right? That would be a red flag. So when we say that we've got 4 numbers we're looking at, what we really want on these 4 numbers is they're all moving the same direction at about the same speed. And that's why we're looking not at the individual number itself, but at the growth rate of that number. Because we want to see the speed that it's moving at, okay? And then ultimately we'll come back and figure out what the number is so we can figure out what the value is. But in terms of looking at the business, is this a wonderful business? We want to see that the growth rate of all 4 of these numbers is moving at about the same speed over a long period of time.
So having them all be moving in a positive direction, but one is moving far faster or has a higher growth rate than the other 3, that would be a red flag to you?
Yeah.
Okay.
Or one's going down like a brick.
Because they really should be tracking each other, it sounds like.
They should be tracking each other.
As like kind of 4 sides of a square or something like that. Like all pointing in the same direction.
Well, since it's so important.
Inwardly or outwardly.
I'm going to give you another
picture. I don't know what's happening to this company.
There's a picture on rule1investing.com. On the left side of the page, there's a column of menu items, and one of them says chart view. Okay? And all it is a chart of those 4 growth rates.
Okay.
And what it does is paints a picture for you. But it's not a square. It's a bunch of lines moving, and you can see, are they parallel? You can see it right away. Or is one of them all over the map? Or are they all over the map? You should see General Motors. When I was writing about it for rule number 1, that chart was all over the map. It looked like somebody scrawled on it because all 4 of those numbers were going every which way.
Yeah, that's better than my square picture. Fair enough.
Yeah. So when you see chaos on those numbers in the picture, you see the chaos. Really what that says is look out the back window of the car. You're going to see a very, very bumpy, windy road. I mean, it's a mess back there. Why would you expect it to straighten out into a freeway in front of you? If you got all that going on back there, man, you better really know this business because it looks pretty nasty to me. I don't have to know a lot about it to just go, too hard, move on.
Okay. So sales, what is this? Sales per share?
Yeah, we turn it into per share so we can see it through the same lens. Sales isn't usually put in a per share basis.
Sales rate per share?
No, just sales per share.
Sales.
And then we look at the growth rate. So we say, okay, what's the growth rate of the sales per share? What's the growth rate of earnings per share? What's the growth rate of book value per share? And then we'll go on to what's the growth rate of operating cash per share. So they're all looked at the same, apples to apples.
Okay.
And what we want to see is they're all going up together, right? In fact, I'll give you a number. We're looking to see that they're all going up together at least 10% a year, average.
Is that a difficult number to reach? Do a lot of companies have that?
It's a difficult enough number to hold on to for a long time.
Okay.
And the reason you think about it is because what that means is, first off, these guys are, we're going to look and see if they're profitable, right? And then by having earnings, you're profitable. And now your earnings per share are growing. So now your profits are growing. So what this means is it means something really important. Remember Charlie was talking about how the second thing he needed to have, the first thing was he has to be capable of understanding the business, because if you're not, you can't get to the second thing. But the second thing is that this business has intrinsic characteristics that protect it from competition for a long, long time. And it's a durable intrinsic characteristic. And we call that some kind of moat.
Yeah.
The water around the castle.
Yeah.
All right. These numbers point to a moat. If you've got 10% growth and it's parallel across these 4 numbers, this is why we call them the big 4. If you've got parallelity there, when you look at a picture of it, all the lines are moving together. You go back 10, 11 years and they're all this far apart, and you come up 10 or 11 years, they're all that same distance apart. They're parallel. They can move around a little in year to year, but parallel in general. And if you've got that and you're over 10%, you got something. There's some kind of niche company there. There's some kind of moat. There's some intrinsic characteristics that's helping protect that company from competition for a long time. Because in 10 years, or well, let's say in 5, the rest of the world's going to figure out, wow, you guys are making money. Mm-hmm. I need to do that too. Mm-hmm. I need to come make money. So I'm going to find out, what are you doing? I'm going to copy it. And I'm going to try to knock you off. I'm going to try to take part of your market share. And when I do that, if you have to lower your prices, then those lines are going to start wobbling around. So General Motors, all those wobbly lines were General Motors not being able to figure out how to deal with really good competitors that had come into its invulnerable, durable, intrinsic characteristics that protected it from competition for 40 years or 50 years. And then all of a sudden, that roof fell in on them. They stopped being good enough to hold on to their brand. And Toyota came in and started handing them their butt.
And you could see that in the numbers.
Oh my gosh, you could totally see it in the numbers. One of the scariest things to me, Danielle, is to know that there are people out there who don't know about this, and I remember you remember Stephen Koch? Mm-hmm. Great mountain climber, phenomenal guy, and really a sweetheart. And he had invited this friend of his who was living in an assisted living home, who was 82, to come to Saxon's birthday party. And so he asked me if I'd go over and pick her up. So I never met her or anything, and I was just driving her a few miles into Jackson and to a birthday. And we started talking, and she was widowed, and her husband had left her money. She learned that I was an investor, and she said, well, I have General Motors.
That's what she said?
Yeah.
When was this?
This was about the time my book came out.
Oh, gosh.
I know. So I'm thinking, oh, baby, oh, man. What do you do? You know, she's 82. Her husband said, keep it.
And you just met her.
I just met her.
You can't be the jerk who's like, oh, you've done everything wrong.
I can't do that. And her husband took care of her whole life. And here she is, 82, and knows what lots of us know at 82, which is nothing about investing. Mm-hmm. She just took his word for it. And at the time, he was right. Mm-hmm. Okay. But time changes, and this company got led by bad people. Not bad people. By bad people. And I'm going to be rough on them, okay, because they put themselves ahead of the thing.
Yeah.
You know, and they put themselves ahead of the people who owned it, which included this 82-year-old woman. And what GM did that was just heinous behavior is that they borrowed money, because their numbers were all over the map and they weren't really making any money. They borrowed money to pay their dividend to keep fooling her.
So she was getting her dividend every year.
Yeah, every year.
And thought it was all fine.
And thought because they're paying the dividend,
they
and they're
must
raising
have
the dividend,
surplus money
they
to
must
pay
have
the dividend.
To pay the dividend. You're on it. That's some heinous ass behavior right there. I'm telling you. I mean, hate
frankly,
that.
I would think that too.
I mean, that's
if I
like,
didn't, try to dig into it at all, you think, all right, that's good enough for me. That's a sign.
And why would GM do that?
To keep up that
freaking
fiction.
Fool you.
Yeah.
Exactly. And you can hear their rationale going on in their heads, right? They got their country club mentality, which is we'll work our way out of this. It's temporary.
That's the Ponzi scheme.
Exactly.
Motto.
They Ponzi schemed themselves into bankruptcy. And they took her portion of her money down with her. And they don't know. Hopefully she had enough there that she could continue to live in that assisted living home, which cost $4,000 a month or something. But she didn't know. And so I want you guys to know. I want you guys to be able to look at investments that people are doing for you and know whether something's changed, whether the story's changed. And all you got to do is look at these 4 numbers and they'll take care of you.
It's a really good point. We talk a lot about the positive stuff with this. We should talk about the negative stuff too. If you don't know, a lot of bad stuff can happen and people can take advantage of you.
Well, this 4th number is where you can see the bad stuff first.
Okay, what's the 4th number?
This is the canary in the coal mine. The 4th number is called operating cash flow. Or sometimes you'll see it written cash flow from operations. Same thing, basically. And in this number, what they do is they take the net income and then they add back in all the stuff where you didn't actually spend the money. Right?
What does that mean?
Well, like if you had expenses that you took in your income statement, but you didn't actually pay them.
Oh, okay.
That money never left.
Yeah.
So I'm going to put it back in.
Okay.
And they add in and out, like they take out the money that you paid, but it didn't show up in your income statement. And they add those all up, add and subtract, a laundry list of things, 15, 20 things. And they get down to the bottom, and what it says is operating cash flow. And that operating cash flow is the money that went into the bank from your operations. That will match your bank balance from operations.
Got it. So we were talking about this fiction of the earnings per share, and this kind of corrects that fiction in a way. Okay. So this is the operating cash flow growth rate, right?
Growth rate that we're looking for.
Okay.
So we got operating cash flow, we got the cash coming in, and then year by year, we hope it grows. And operating cash flow is pretty consistent. It grows right along pretty good.
Where do you
with
find,
a company that's growing its earnings.
Where do you find that number in the financial statements?
That's on the cash flow statement, and the cash flow statement is in thirds. And the first third is the operating cash flow portion of the cash flow statement. It's the upper third of it. And then the next two sections are cash from financing and cash from, I forget what it is, cash from something else. So the key one is operations.
First third of the cash flow statement.
Yep. First third of the cash flow statement. And that's the key one to know how the business is doing in terms of cash flow. And if you've got great cash flow, you're not going broke. You can have no earnings. You can have negative earnings and be ripping it with cash. It's so funny. It's so funny. And there are a lot of companies that actually, because of general accepted accounting principles, have negative earnings, but a lot of cash, right? And among those are real estate companies. Because they have such high depreciation that they take advantage of to lower their tax bill. They don't have negative earnings per se, but you can see them get down there. Their earnings get down to just almost nothing. But then you go over to the cash flow statement, and it's just pouring cash. And you're getting these big dividends. So that's
where knowing about the industry really comes into play.
That's where knowing about the industry comes into play. And that's why you have to be capable of understanding.
Yeah.
That's number one.
Oh, Charlie.
Yeah. Charlie's
so
awesome.
Wise.
So let's wrap this up with the numbers. These 4 growth numbers are so critical because they give us a picture that's very difficult for accountants to manipulate completely without us seeing them doing it. But it's key to understand that it's a picture out the back window of the car. It's not a picture of the future. It's not a crystal ball. It's very, very key to know that you can only go so far by just looking at what's happened. You have to be capable of understanding the business and the industry it's in order to know something about where it's going in the future and to make a reasonable projection of the future, because ultimately that's about where we're going to figure out the value of the business. So, what we're going to talk about next are 3 more numbers.
What? I thought we were done.
No.
Oh my gosh.
Not done. In fact, one of the next numbers, it's almost hard to say which of these is more important, these 3. But in a way of speaking, and I'll come back to that next time, these 3 numbers are more important than those 4 numbers.
Are there any more numbers after these 3?
There's maybe a couple more. But these 7, 4 growth numbers, and these 3 numbers that help us understand the management team.
Oh, okay. I can get behind that.
So we'll go over to the managers here.
Okay.
But it's very difficult. Looking at managers, looking at the CEO is very subjective. Do I like this guy? Do I think he's honest?
Subjective.
Do I like her? Does she know what she's doing?
Where am I getting this information about them?
Yeah. Like Ginny Rometty over at IBM, right? She's smashed the glass ceiling and is, it's IBM and she's running it. And she's come into IBM as a CEO, like most of the CEOs in IBM out of the sales group. And she is being criticized every which way for not turning the ship. And yet Warren Buffett says that she's doing a brilliant job. Brilliant job. And I have been very critical of her because the first time I watched her speak, I thought, what, is she smoking something? It's like I can't make sense out of what this woman is saying about this company, right? But she has her own way of doing it. And that it didn't really reflect really who she is and how capable she is in her effort to try to portray a very, very complex company in just a few sentences. Right? It didn't come out all that great. She sort of had Ginny speak coming at me, and I'm like, what are you talking about? Right? But it turns out she really is doing a magnificent job, I think, and Buffett thinks so. And so you sort of are looking at this subjectively. You got all these people that think maybe she's not doing a good job. People call for her to be replaced. And then you got Buffett saying she's really good. Very subjective. But there are numbers we can look at that don't lie.
Okay, let's talk about those next time.
Okay. Time to go play. See ya. Hey, you guys, thanks for listening to InvestED, the Rule Number 1 podcast. If you like us, please subscribe, please, and leave a review for us on iTunes. By the way, you can get our notes and links for this podcast and post comments about this show, and also get more information about how to invest on your own by going to investedpodcast.com. By the way, everything, this is important, everything discussed on this show is either my opinion or Danielle's opinion, and it isn't to be taken as investment advice because I am not your investment advisor, nor have I considered your personal situation as your fiduciary. This podcast is for entertainment and education only. I gotta tell you, I really hope you enjoyed it, and I know Danielle does too, so until next week, it's time to go play. See ya.